Welcome to TradeTheNBI.com. This is John. This report is for the 21st of February. Well, we got a continuation exactly where we were looking when we had the white spiking above magenta and magenta remaining below yellow. I kind of marked these little yellow boxes signifying those moments where we get these white spikes and the subtle difference between them, where you have the white spike, magenta's below yellow. Those are the cleanest of dip signals. More problematic, though, when you have the white spike, but you still have magenta riding above yellow. But still below the 25 is general weakness. Once it gets above that 25 level, which is the white line right here, then you can see the positive aspect of it. And that's exactly what led to that original breakout move that took place back there in October. And then again, we had the white magenta dipped below 33, still a little bit of strength, but stayed below the yellow right here with the magenta, and then finally the magenta broke down, and then that led to, that cascade that continued lower. This most recent one, on the return back up towards the 50%, we had the nice jump. Magenta was fading, but still presents weakness. What was interesting is the dip below 25, you had that immediate pivot, so it was a real quick, effective turnaround, but it dipped back below the 33 and then continued, which is where we saw all of the red. And then this most recent setup, when that white crossed above magenta, as we were watching it happen intraday with that 44-40 range, and cascaded lower and maintained it. Now we've got a dip of the white, which is why we didn't get as an extreme move. If the white had continued higher, we would have expected a much faster, more stronger move towards 0% line, which is the expectation when you get these spikes, that you'll achieve a move towards the 0%, barring any significant change. Would we call this oversold or anything? Not necessarily in that same direction. What we have is literally shorts increasing their strength within this play, and we have short-term, mid-term buyers on the DOC showing that they're really not participating at a buy point yet. Now we have that 23% as a flexible pivot point, which is at 43.53. So that makes it pretty easy when you're starting to look at it from an intraday standpoint. From an NQ standpoint, yeah, we can go through and see the exact same configurations on the NASDAQ seem to respond even faster before, and significantly weaker because where the ES just below the 23%, you're much closer to the zero here with the NQ. Are we at a point where you can get pivots up? Yeah. If I continue to see what I like from a short standpoint, at least, is that continuation of steel dipping lower, and in this case the cyan has already crossed over. That's very weak, and the rising of the orange in this particular case, particularly after a positive dip with green crossing over. That was where we had this big bounce, and then the next day literally rejected that and started to fade, and that's why we've had that continuation lower. So the potential for a little bit lower for the NASDAQ to that 0%, very strong. Because of the flight into treasuries, the yield has fallen just a bit. But gold reaching its new apex here on positive extreme, so we could get some volatility within that gold. But as we've talked about from way back, the trend is continuing to go higher and should sustain itself. And the problem being is, as long as oil is at these levels and has been at these levels for a significant period of time, forward-looking inflation is not in any way, shape, or under control. What I was suggesting to you, though, in the previous video is that rising oil prices and that aren't necessarily a horrible thing from the Fed standpoint, because what you're doing is removing a lot of liquidity. You add some volatility to the market, and you will get a much more conservative approach from people psychologically to alter their spending and or savings patterns, which would be enough to remove some of the buy pressures. The difficulty is that as long as you have people still thinking, though, that they need to hoard or acquire products, because of potential calamity situation like we had with the pandemic start and things like that, where people just wanted to have the security of food resources, and that drove a lot of prices. So we'll see if that's going to start to soften as demand is crushed by basically taking away purchasing power. From a euro standpoint, again, we felt the weakness of the euro is not changed. The eurozone is far worse, but the Fed doesn't want a collapsed euro because that doesn't help as far as maintaining strength of purchasing U.S. goods and things like that. Plus, it also does help the S&P as long as the euro is elevated, but this is still way higher than it really should be. When we were down at the 111, that was starting to get a concern, because when you get towards that 108 range, it becomes a bit more perilous, where you can get a pile-on effect. And, a sub $1 euro would be horrible for the Fed's view, particularly given how problematic the banking system in Europe and that is. And so that could create they've already got credit risk because U.S. banks won't even lend to European banks at this particular stage. So there's a lot of credit woes in there. And of course, it's interesting because you have the cryptos doing, at least Bitcoin at least, doing exactly the opposite of what a lot of people suspected would do, that when inflation would drive Bitcoin, but it's been used as a speculative tool in the last couple years since the acquisition of futures contracts like this, and it allows for just parking of money outside of no-yield treasury, and oftentimes as the market suffers, you can see resources being pulled out of it to cover or add to setups within the broader market. And so this weakness that we've seen there was readily called for. We had a continuation of white, and it's that magenta remaining under that 25 level, and then when it does pivot lower below the 25, we love to see that. Particularly on a daily, it's very strong. Every time you get that pivot, you end up moving back towards the 0% mark. In fact, that's what we're looking at again here as the rises, even despite the fact that we've had some significant oversold with building pressure. It is potentially possible that now shakeout started to improve, couldn't quite get positive, and is rolled over just again. So that's putting it right back to what I talked about, even as we saw the divergence back up towards the 45 here, and that we were still looking to come back towards that previous algo at the 39 level, and that's exactly what it's done. ETH, Ethereum, just very nice trade within that, and certainly moves beautifully, at least with the indicator reads on it, so very nice. From an ES standpoint, on the 50K chart here that we run with the program setups, that short took place back on the 17th with the original signal, and it was literally at the open towards the 64, and nothing has changed from there, and that's well over 100 points. You can see where it's just nothing but red, and nothing has changed from that depiction reading, and even with this most recent spike, and again, a pivot right there of magenta, we would still expect lower. Interesting that we're still right below that key algo levels that we had here from 50K chart 4351. Makes for a perfect pivot within that construct. So all good from that standpoint. Intraday, we'll look at the 5K. Every time we got a little fade, you'd have these building phases, a little bit of a spike to see how much short covering you can get, and what is happening now, you're not getting a whole lot of short cover boost as much as you're getting additional selling into that pump, and that's breaking us down into these additional lows, and that just carried through and then finally built up, and then it's that later in the afternoon kind of construct that allows for the nice pumps, but of course this one was all on positive extremes, going all the way right back to that 43 range, which probably filled back in very nicely. Cut a little bit of a pushback towards that 50% off of it, and then just went sideways from there, but still very negative ending to the day. Preparing for a new week, so have the market woes, so to speak, changed. I don't know that they're really that big of woes. It's just back and forth. We haven't seen any major catalysts from any of the big names, which would have significant market weighting, would really cause a tremendous move to take place. So as long as those hold up, this added volatility, though, I think is just going to add to a bit more caution, which creates great intraday swings. Because it dries up liquidity just a little bit, and when you're talking about a market as big as the S&P, and that's significant. So we'll just keep playing it as it is. As always, I will update you with changes. I think you'll probably see a few alterations coming out in the next few days, particularly with a couple of the program adjustments and that. But all in all, really good stuff. As always, though, trade well. We'll talk to you later.